All right, a lot of wrong guesses in the chat. Somebody was betting on bare chest today. Sorry, Dave Edwards. Sorry to disappoint you. That would have been hot, but we didn't go in that direction.
Bare chests?
Bare chests. Like what T-shirt is Michael going to be wearing today? You know what I'm saying? Somebody was like no shirt.
No, never.
Sorry, never that. Let's see. Joel Dunlop. Duncan is an F1 fan. Wondering if he's on a one-stop or two-stop strategy tonight. I don't know. Is that a car racing reference? I don't really know.
Yeah.
Frank Oberly likes the fitted. All right. Who else is in the house? Evan Nickel. Whole Duncan Hive is in effect. Richard Piers. Let's see. Who else? We got John Grayson.
Who cares who's here? Let's get it started.
John Grayson's behind the scenes. Duncan's behind the scenes. Michael Batnick is here. We have a lot of stuff to get to tonight. So let's go right into our Y Charts title page. Throw that up. Can't ever forget Y Charts. Best sponsor we could ask for. Y Charts is ride or die for what are your thoughts. If you haven't tried it yet, there's a link below. Check it out. A discount for your first membership. If you do research on stocks, ETFs, bonds, economic data, whatever, Y Charts are pretty great site. We love it. We use it for all the charts, most of the charts that you'll see on our blogs and you'll see here tonight. Okay, first things first. Is this the year of the retail trader? Yes or no?
Is this the year of the sure? Yes.
No, but seriously.
Emphatically. An emphatic yes. Absolutely.
It definitely is. Okay.
Absolutely.
This is Wall Street Journal. Let me set this up.
I mean, 2020 was the year, but 2021 is the year.
Oh, so 2020 was the prequel. 2020 was The Hobbit. We're in Lord of the Rings right now, okay? Mm-hmm. This is the year. This is Wall Street Journal.
Who's Gandalf? Michael Saylor?
No, Barry's Barry's more mysterious than Saylor. Yeah. Saylor is like Ron Popeil at this point. I think I saw this guy making like 8 or 9 appearances today or yesterday.
What's Ron Popeil or who's Ron Popeil?
Like the bread machine, the pasta maker. This guy is just selling the shit out of this Bitcoin. I've never seen anything quite like it. All right. Wall Street Journal. Non-professional investors are continuing to upend financial markets and build on their forceful entrance into the arena last year. See, they entered last year. Mm-hmm. This year they took over. In the first half of 21, new brokerage account opened by individual investors have already roughly matched the total created throughout 2020, hitting more than 10 million. 10 million new brokerage accounts this year.
By the way, speaking of arena, I rewatched Gladiator. First time in like 20 years. So good.
Holds up?
So good. This blew me away. Activity from individual investors. No.
Oh.
Robinhood accounted for roughly 4% of total U.S. volume in January. That's a lot.
4% of all the trading.
That's a lot. What is that? 60? What is that? 60 billion in assets. That's a drop in the ocean. And they're 4%.
Wait. Is that by dollars or by share amounts?
It says total U.S. share volume. So let's go shares.
All right.
I don't know. What the hell is the difference?
Yeah, I guess. What's impressive, I guess, is that's all in odd lots, small trades, fractional trades. It's pretty wild.
It's a lot.
Yeah.
So let's throw up some of these charts that we got here.
What do we got?
We got like share of equity and stuff. Come on, guys. Show us the charts. Look at this. This is wild. This is wild. So 2020 was the prequel. 2021 is definitely the full the feature film.
So what is this?
25%.
25% up. What it's up from is so remarkable. I remember in 2011 writing blog posts like, will mom and pop ever return to stocks? Okay, you got your answer. 10 years. They'll be back. It'll take a global pandemic, but they'll come back.
I don't think nobody could have seen this coming.
What other charts do we have? What is this?
This is we'll get to this in a second. Take this down. So for retail, I don't know where I was going, Josh. Take the mic.
Here are the four reasons that the Wall Street Journal cites Number one, why it's the year of the individual investor. One, their trading volume keeps growing. We covered that. Two, they tend to move in and out of trends quickly. This is like an underrated part of this. Just the idea that different stocks can heat up and then cool off almost overnight and everybody moves on to the next thing. I don't know that that's shaping the overall market, but I think it's definitely changing the way people think about how they're trading.
So I've been using this analogy for months now. That like, oh, what happens when the meme stocks stop working? Or what we were saying this before, meme stocks. What happens when the stay-at-home stop working? When Zoom stops working? When Teladoc? Guess what? They did stop working, and you know what these people did? They moved on. So the analogy that The analogy that I've been giving is that scene in Independence Day where the president has the things coiled around his neck and he sees what they're doing. There's going from planet to planet, sucking the resources dry and then moving on. That's what these meme stock traders are doing. They're getting all the juice, squeezing the berries, and then they're getting out of there.
Yeah, and if you're in that world, I guess you have to keep your eyes plugged to all these YouTubers and TikTok accounts and just kind of sense when they're moving on to something new and they're bored. That's not interesting to me because I'm living my life, but I would imagine that there are people who are sitting staring at a screen all day anyway.
Don't knock it till you try it.
That screen.
Don't knock it till you try it. So
I did try it, and then I turned 20. And I got back into girls.
Stop it! You turned 40. So what's interesting is we've got, for the first time in a long time, like thematic ETFs all over the place. Active ETFs. More openings than passive this year.
Let's separate these two things: active versus thematic. And there are some thematic that are actually active, which is a whole lot like Kathy Woods. But Wall Street Journal basically saying that there are 115 active ETFs launched so far this year, and it's only June, versus 51 passive ETFs. So I guess all that hand-wringing about how the whole market's going to go passive, we can forget about that.
No, it has. But hold on. Honestly, how are you launching passive ETFs in 2021? It's over. There's no more to launch.
In other words, like every category that you can conceivably create a passive index product for already exists.
Yeah.
Yeah, I agree with that.
It's still notable.
I don't know what they think is missing. But then a lot of these things are extremely nonsensical. And then some of them are like hedge fund guys that they were just like, you know what? You can't launch a hedge fund now, but we think we have a strategy, so we'll do it as an ETF. Mm-hmm. Prepare to make no money, sir, compared to a hedge fund.
Well, no, of course. But so even despite all the success of these funds getting off the ground, I want to say all the success, it's obviously mixed, but it's tiny. 3.4% of the overall ETF market. So it's a big dollar number, but still tiny.
I'm not going to make you defend any of these in particular. I'm just going to say them out loud, what we're talking about. Round Hill Investments MVP, which according to this article, I guess this is Bloomberg, focused on companies that own or support professional sports teams.
Oh, ironic. Madison Square Garden. Get the hell out of here. It's enough.
Was there a lot of demand professional sports team thematic ETF? Did they raise money?
Dude, there wasn't demand for the iPad or the iPod, but he made it so you could create demand.
What is the economic rationale behind that? Like why somebody would want to invest in companies that support sports teams?
But I don't know. You're trying to make money.
Crickets. All right. No, not.
What do you mean? If you want to own sports teams, but you can't. You're not a billionaire. You want to own a little WWE, a little MSG, some of the football teams in Europe.
Oh, okay, I don't hate that actually. I understand what you mean. All right. Here's this guy. I think this cuts to the chase. There's generally increased optimism as we come out of the pandemic, and people are more excited and feeling more optimistic about their business development. Fundraising is easier in a bull market. Okay. Yeah, no so kidding. I guess that makes this bull market no different than any other.
Dude, I love thematic ETFs. It's if you're trying to have fun for a small portion of your portfolio, no, this is not core for anybody, right? It's people, listen, pick ETFs, you pick stocks. I like what's going on in this space. There's some cool stuff happening.
I might buy a thematic ETF for space because I'm getting increasingly interested in that, and I don't believe that you can really have the exposure that you want through like the S&P 500 or any other major index.
So buy ARCX, Space Exploration and Innovation. There you go.
So that's an active one. What if I just want the components? Doesn't that kid we know, what's his name? Andrew?
Oh, Andrew Chaikin?
Andrew Chainin. What's his call? What's his space ETF?
I know. I saw you launched one.
Anywho, I owe him a phone call anyway.
All right, it's enough.
All right, it's enough with this. Anyway, so it is. So we're in agreement. It is the year of the retail investor. I don't know what that means for next year, but certainly they are shaping all of the market coverage. Everybody's trying to talk to this audience, I guess us included, and they're here. And get used to it. And I think on balance, it's kind of cool that they're back. So
all right. So I'm about to some sentiment trader data and charts. Let's just put this in the interesting but shoulder shrug emoji category. Like, I don't know if this means what this means. It's just like, I like this data. I'm into it. All right. So the stock market is kicking ass. I think you had one of those like the like 98% of stocks yesterday in the S&P were up. It was every single stock was up pretty much. It was
year to date S&P plus 13%. What's NASDAQ doing? 9 or 10?
Made a new all-time high today. So
okay. All right.
But so things look good. Listen, like things look good. Now this data is probably 2 days old, so it appears that things have changed, but here we go. You've got a record high of the number of the percentage of stock in the S&P 500 at a 1 month low. So it looks like 40% of stocks are at a 1 month low, while the S&P is within 1% of a 52-week high. I thought this was very interesting. Here's one more piece.
Hold on. I don't understand. What?
It's very simple.
Okay. 40% of S&P 500 components are at 1 month lows?
Yes. The lowest level they've been in 1 month.
So is this where the bears would say, see, breadth is deteriorating?
Yes.
What percentage are at a 90-day low? Probably very few.
Yeah, I mean, zero. Here's another good one. Okay. So this is from today. This is from today. Since 1928, the S&P 500 closed within 0.25% of a 52-week high, 3,400 days. Right? It's happened quite a bit. 3,400 days. On those days, an average of 69.9% of stocks in the index closed above their 10-day moving average. Makes sense, right?
Yeah.
Today, only 37% of stocks did so.
Closed at a 52-week high?
Yeah. So remember, of those 3,400 days where we closed at a 52-week high, only 5 of them had fewer stocks in short-term uptrends. Interesting. Does it mean anything? We'll find out.
Well, this data is from hold on. This data is from Friday, and yesterday the Dow went up 500 points.
No. That chart is a few days old.
Okay.
The data point that I just gave you is from today.
So we're going to need a lot more. We're going to need a lot more participation in order to keep this thing going, or not roll over.
I mean, listen, it is interesting and probably actionable. I don't think anything's necessarily actionable, but it's interesting. I like this data.
Well, I do think that we're getting this classic rotation out of Dogecoin into small cap value. No, I don't know of any stocks that are not doing well right now. Like almost everything I follow and look at on a semi-regular basis, it may not be at a 52-week high, but I don't know of any stock that looks bad right now. Can you think of one off the top of your head? I follow 200 stocks.
Teladoc doesn't look great. I mean, no, listen, it's a bull market. Things look good. What do you want? I mean, things look good. I mean, don't get me started. Things look really good.
All right, so it's the year of the retail trader. It's definitely not the year of the hedge fund. I think we can all agree on that too.
Well, I don't know about that. There's some. I mean, availability. There's some shit happening. I don't know how bad hedge funds are doing.
I don't think it's a great year. I don't think it's a great year for hedge funds from many perspectives. And I've seen great years for hedge funds. This is not one of them. All right. So first of all, this Renaissance thing. Has this guy made money since the book came out? Or this guy? He's not
the
even
Medallion Fund prints money every year.
Yeah. So
the employees make money hand over fist every year from the Medallion Fund, which has been closed to outside investors for like 15 years, I think.
If this was a brokerage firm and not a hedge fund, this would be, I don't want to say illegal, but this would be considered cherry picking. if you if you have a brokerage firm, your FINRA registered brokerage firm, and every day the best trades done on a proprietary basis by the trading room at your broker dealer end up in the principal account or end up in the accounts of employees, and the worst trades end up in the client accounts, they will fucking handcuff you.
Yeah, but come on, nonsense. Not relevant. Not
How
relevant.
is it nonsense?
It's not relevant. It's that's totally irrelevant.
Well, I'm not accusing them of cherry picking. I'm just making the point in the difference of business models.
You know, dude, I understand it. If you're a shareholder, you're pissed off, but you know the medallion's closed. They're not. This is not the surprise.
Dude,
and you see the track record of.
Wait,
of this
put that graphic back up.
It sucks,
Mike.
It sucks.
Mike,
Dude, I know.
Conceptually, how much are you paying to be in medallion these days? Fucking in RIEF, 5 and 50. What's
no
3 and 30?
It used to be was it 3 and 40? It was whatever it was. There was still alpha in the medallion fund left.
All right. First of all, I know dogs. Like there's a cockapoo down the street that made money in 2020. So I don't even understand how it's possible to lose 19% in 2000. Like I know poodles and golden retrievers who had alpha last year. But put that aside. If you are the end investor, not a consultant, not an intermediary that puts somebody in that fund, but you actually are the end investor, you lost a fifth of your money in one of the best years for stocks of all time. And then you hear that there's an employee-only fund being run out of the same shop that almost doubled. You're just saying to yourself.
What do you mean then you hear? Everybody knows this.
I don't know that everybody knows this.
Of course they
know this.
Dude, the institutional investors are not fucking retail. Of course they know this. What are you talking about?
The end investor whose money the institutions are investing. You losing the
anyway, I don't even know.
Are you losing the thread here? I'm saying if you're the guy that runs the hospital's pension fund that gave money to an institution that put it into 2 Renaissance funds that dropped last year, and then you happen to stumble upon a Wall Street Journal article telling you how great Medallion is doing.
Dude, there is no and then. Medallion Fund is the most successful fund of all time. Every single person knows.
We all agree. All right. Listen, either way, ugly.
No. Well, it is ugly because quant funds have had $170 billion, not worth of redemptions. The assets have fallen by. So that's probably a mixture of redemptions and really lousy performance. Oof.
Yeah, it's not great. So that's why I say this is probably not the year of the hedge fund, because what was the strategy that was absolutely on fire for inflows going into the last couple of years was quant funds.
Was what?
Quant. I'm saying like 2016, 17, 18. All right.
Well, let's hold on. Before we move on, let's move off this. Let's talk about the irony of White Square Capital.
Oh, I was gonna go to go to the tax thing, but yeah, let's do this one. This is more fun.
Okay. So White Square Capital was a hedge fund run by former Paulson trader Florian Cronowit, don't know who that person is.
Great name.
So there's an irony here, was that we could look back on market participation from the 50s to today, and back then it was all mom and pop buying AT&T and whatever the hell they were. And we would say, and listen, this is partially true. The competition back then, where you were shooting fish in a barrel, Buffett was competing against people who didn't know anything, literally knew nothing. Now it's the opposite. Now it's the rise of the retail, and they're equipped. They've got the goods. They're skilled, and they're shutting down hedge funds because they're moving too quickly.
Let me set this up. So White Square Capital is a hedge fund that was betting against GameStop, and they just closed the fund. Totally unrelated to GameStop, they say, which is hilarious. Absolutely hilarious. Like, this is like better comedy writing than the last season at SNL. But this is, I guess, the Financial Times just taking their word for it. So it's a former Paulson trader, and they had $440 million in assets at their peak, a bet against GameStop, double-digit percentage losses in January. The move marks one of the first closures of a hedge fund hit by the meme stocks. But here's the quote. Quote, the decision to close down is related to thinking the equity long-short model is challenged. There are way too many fish in the pond with the same strategy of long-short. The traditional edge is being arbed away there's an oversupply of capital. A person close to the fund said the decision to shut was unrelated to the meme stock rally. Bullshit.
Who was that person?
Yeah, who was the person close to the fund? It was the guy's hairdresser.
But to me, my favorite quote within the quote is the traditional edge is being arbed away. There's an oversupply of capital.
Well, so then if you believe that, then it makes sense to give the money back.
Yeah.
So what we do doesn't work anymore. However, think about how many amazing track records were put up by traditional long short equity over the last year or two. They're mostly guys that get involved with growth stocks. They're mostly Tiger Cubs. But they call themselves long short nonetheless, and they smashed it out of the park. So it just seems like
what do you have to say on the taxes, or do you want to move on?
We shouldn't spend a lot of time on this, but it's yet another reason why it's not been the year of hedge funds. This investigation into billionaire hedge fund managers and how they pay or do not pay taxes is another facet of that idea. And I thought this was interesting. This guy, Boaz Weinstein, who apparently has not been doing well over the last few years as a hedge fund manager.
But was up 75% in 2020.
Had a great comeback year, but he lost money for like 4 or 5 years.
It was not great.
All right. But anyway, the New York Times asked him to see about his tax returns, and he just sent them.
Yeah, I thought this was cool.
That was pretty badass.
Yeah.
He's like, here you go. But anyway, the bigger issue of whether or not people that make $30 million in 1 year lose $20 million the next year, net $10 million over that 2-year period should owe something in taxes, I think is not going to go away. So this is not the year of the hedge fund. But I think we spent enough time on this. Let's go now.
Last thing. As I was reading this, I was like, well, what's wrong with this? They paid $124 million from 2010 to today in taxes, federal, state, city.
The couple filing jointly?
Yeah, him and his wife.
Yeah.
On taxable income, $290 million, gave $30 million away to charity on income of $246 million. So they paid 50% in taxes. All right, there you go. They paid.
I think the issue was over. I think the issue was over the years where they didn't pay anything, not the total amount over the whole period.
Paid 50% in taxes.
Listen, this will come and go. Tomorrow, somebody will do something really, really bad, maybe Chrissy Teigen, and everybody will start talking about something else. So it doesn't matter that much. I just thought it was interesting that the guy literally emailed the reporter his taxes.
Yeah, that was badass. All right.
That was kind of cool.
Stock ownership is at an all-time high, which usually sends the antennas up. And listen, there are plenty of signs of excess. I mean, I'm not going to deny that, but good. Isn't this what it should be? Don't we want more people owning stocks? Is this a bad thing?
You know this shit is backwards, right? Why would stock ownership not be at an all-time high with the stock market at an all-time high? Please explain to me why anybody thinks that that's the way it should be, or why that would make any sense whatsoever. Of course, it makes no sense. And stock ownership, like who owns stock if the people in this chart don't own it? I don't even understand the data set. How do they?
They're looking at financial assets.
Okay, but somebody has to own all the stocks. So if the stock market's at an all-time high, then of course ownership would be at an all-time high. Why don't you just show me a chart of the market? I don't understand. This is another thing that's interesting. People are like, ooh, sentiment is high. Well, why the fuck wouldn't sentiment be high? The stock market just went up 75% in 12 months. Where should sentiment be? In the toilet?
Right.
Like, do you even have a brain? So I never understood that actually, and why anybody would think that's a contrary indicator. At some point, it will be a contrarian signal, but not the whole time. When you're in a bull market, people should be acting like it's a bull market. They should be pretty happy.
Here's another good one from John Street Capital via Goldman Sachs. He said, households, foreign investors, mutual funds, and pension funds, they own 99% of the market. They have an aggregate 49% allocation to equities, which is the 96th percentile since 1990. So people are feeling good about stocks. To your point, as they should. Of course they're going to feel good about stocks. If stocks have treated investors very well in the last 12 months.
One other thing. Stock buybacks peaked in the fourth quarter of 2018. We got the corporate tax cut at the end of 2017. didn't really take effect till January of 18. Stock market actually did not have a great year, but buybacks probably kept it from a real crash, right? You had like the trade war, you had Powell going too far, raising rates. Stock market ended up down 2%, I think, in 2018, with 2 double-digit crashes during the course of that year. Buybacks probably cushioned that blow. We could have had another 2008 and been down 37% on the year, right? If you didn't get rescued by Powell backing off and all that corporate cash. You haven't had that support in years. They fell off a cliff in 2019 relative to 18. And in 2020, nobody did buybacks because everybody was trying to preserve capital, right? You couldn't conscionably be doing buybacks and then eventually maybe have to let people go, right? You're going to get that buyback cushion back in 21. Arguably, it's
already here.
done.
It's already coming. I'm looking
so
at
now you have those retail investors that you were showing me, the stock ownership. They're now fighting with corporations to own stocks. Real rates on bonds are negative. Nobody wants to lose money for a living.
By the way,
you have a lot.
You had whatever. Buybacks will be at an all-time high in short order.
Without a doubt. So my point is, now retail investors that understand if they're not part of the stock market, they're not part of the economy. They have no shot in life. They understand that now. Last year, they got the message. They want to buy equities. Foreign governments want to move up on the risk curve. And Powell basically said, we're not doing anything this year. So bonds will be negative real rates when you factor in inflation. So that just, to me, points to a continued melt up for the averages. I mean, something could change, but that's how I feel right now. Okay, we're going to do this inflation panic thing. Is it over? I think it's over. What do you think?
It could rear its ugly head again. It could be like the meme stock where it just reinflates again. I don't know. I don't want to say it's over just yet. Let's calm down. It certainly has subsided. Like, it has subsided.
Okay. Paul Krugman, New York Times. Not somebody without an axe to grind. We all understand that. But, quote, for those paying closer attention to the flow of new information, inflation panic is, so last week. Seriously, both recent data and recent statements from the Fed have deflated the case for a sustained outbreak of inflation. That case always depended on asserting that the Fed is either intellectually or morally deficient or both. To panic over inflation, you had to believe either the Fed's model of how inflation works is wrong, or the Fed would lack the political coverage to cool off the economy if it were to become dangerously overheated. Both beliefs have now lost most of what credibility they may have had. Let's throw up some transitory charts, shall we? What do we have here?
Well, hold on. So, all right, we'll look at stocks. So the materials, industrials are pulling back significantly. They had a great run. We got Alcoa, Freeport, Caterpillar. Let's look at some commodities because I think this is the data that he's referring to. So we got soybeans 20% off highs, corn 15% off highs, wheat 13% off highs. I don't have lumber up here. I think did lumber get cut in half?
More.
Really?
Crashed.
That was quick. All right, let's look at. Go ahead.
The fastest crash they've ever seen in the history of tracking lumber prices.
Well, fastest rise they've ever seen too. Makes sense. Let's go to metals. So we've got gold 15%, silver 12. What is it? Copper.
Why did you pick July 20 as the starting point? Just random? Oh, it's a year, 1 year chart. Okay, got it.
Yeah. And we've got the dollar rallying nicely. But to me, are these, I'm using air quote, data points proof of anything? Like,
yes.
Just 'cause,
yes.
Really?
Yes.
Okay.
Used car prices for the second half of the year will be down substantially from their peak.
Let's see it. I don't disagree, but we haven't seen it yet.
No, we have begun to see it. Housing prices have been totally stopped in their tracks by sticker shock. Mortgage rates haven't moved.
I don't know about that. I don't know about that house data.
Dude, you had a 20% plus on average rise in prices for homes, and people just stopped. The data this month is showing that there's sticker shock in that market, and that people are no longer paying higher and higher.
Fine,
higher
be that
prices.
as it may. Let's just grant the fact that supply is going to come back online. Supply is going to meet demand. Whatever. Still, the thing that people were initially worried about, people that had inflationary fears, was not the supply. That just happened to happen with the bottlenecks and the canal and all that sort of stuff. The real fear was the too much money when the economy reopens, all the people that were sitting on all this money. That part of it we haven't seen play out yet. And by the way, I'm not like too worried about that, but that we still haven't seen that yet. So I think it's a little bit premature to declare it over. That said, inflation fears have definitely subsided.
Listen, none of the stuff that we just talked about is actually in core inflation. They take out energy, they take out food, the two most volatile components. So corn prices, none of that shit is even in the calculation. The two types of inflation, the core inflation versus like all of the other very volatile prices. The core stuff is what they're going to look at. And when they look at that, I think it's pretty obvious that like these fears are most of what the Fed is looking at when they look at PCE. One of the biggest components is rent. That part's probably going to stick. We're going to have more inflation.
Actually, it's good. The moratorium is being lifted at the end of this month, so rents are probably going to begin to rise potentially substantially. So we'll see.
No, I agree. That part's probably going to be sticky because the income hikes are going to be sticky, and the wherewithal for people to pay higher rents is going to be there. So I don't have a problem with the inflation calls. It's the inflation panic that I think ended. And now we're just going to say, okay, prices are rising. That's the nature of the economy that we're in right now.
And of prices in general. Right.
Yeah, I think that's okay. All right, what do you got?
All right. This is not like necessarily I don't even know why I'm like sugarcoating or softening the blow to Paul Tudor Jones, who is worried that I'm going to dunk on him. He's a billionaire multiple times over. I'm sure he's just fine. But Paul Tudor Jones was talking about, I just want to talk about the idea of like lionizing these legendary investors. And it matters. Like, I really do think it matters. I know like a lot of people say like, well, you know, we understand that, take what they say with a grain of salt, but I'm telling you, like to the individual investor who's watching and reading, it matters. So Paul Tudor Jones on CNBC was talking about Bitcoin. He said, I like Bitcoin. Bitcoin is math, and math has been around for thousands of years. I like the idea of investing in something that's reliable, consistent, honest, and 100% certain. I look at the Fed in 2013 versus the Fed in 2021. The difference between Trump and Biden. Do I want to have faith in human nature? I like Bitcoin as a portfolio diversifier. And here's really what I want to focus in on. He said, I want to have 5% in gold, 5% in Bitcoin, 5% in cash, 5% in commodities. At this point in time, I don't know what I want to do with the other 80%. I want to wait and see what the Fed has to do on Wednesday. If you look at QE, we have planned between now and December, and the 60% correlation between the Qs and the reserve Fed holds. You can argue NASDAQ will go up 20% if we stay at 120 billion. Okay, here's what I want to say. If this wasn't Paul Tudor Jones,
this is like stream of consciousness.
If this wasn't Paul Tudor Jones and this was your neighbor, you'd slap him and say, "What the fuck are you talking about?" So, like, seeing how the sausage is made is kind of ugly sometimes, and just the way that we put these people up on a pedestal is
okay.
Here's why
PTJ belongs on a pedestal. One of the greatest traders of all time. Period. Full stop. And the founder of the Robinhood, not the stupid trading app, the founder of the Robinhood Foundation, which raises like tens of millions of dollars for homeless people in New York and elsewhere to eat, to have shelter, and actively runs that. It's not like something he just throws money at. Like, he deeply cares about. Okay, he should be lionized for those two things. Should somebody, when you say this matters, so I disagree. I think it doesn't matter. The market celebrated his inflation panic by having the 10-year drop below 1.5%.
Hold on. I'm not saying it matters
immediately after he said it.
Dude, I'm not saying what they say moves markets, but I'm saying that 100% individual people, not everybody, some people are severely influenced by what these people say. Economist warns. Every time Bob Shiller talks, it's economist. He hasn't been, he's been, I mean, whatever, but it does matter.
You're right. The longer I do this, the more I understand that my job, and the reason why there are financial advisors in this world, is to talk people out of having knee-jerk reactions to the commentary of billionaires or day traders in the media. I honestly think that's one. Yeah, well, listen, this is one of our highest level functions, I think, as financial professionals who work directly with families, is to contextualize the sound bites that and I'm not saying people shouldn't speak their mind. I do all the time. I have opinions, but separating the opinions of people in the news, on Twitter, on like go down the list everywhere that people can now publicly comment, Clubhouse, this place, that place, separating that for what's best for people and their retirement. That is a huge value add that advisors deliver. Most advisors deliver to their clients. And so I think when you do have a lion like PTJ on TV and he's saying things and he has a lot of influence, there should be an intermediary that talks to the person who's highly susceptible to that.
Yes.
And say,
yes.
Look, the dude is on live television just riffing. He doesn't know what's going to happen
Right,
either,
right.
but his opinion is interesting. It's not advice for you. Tudor doesn't give a shit what you do with your retirement portfolio, right? So that's how I am okay with that contradiction. I love to hear what people like Paul Tudor Jones has to say. Doesn't mean I'm going to jump off the Brooklyn Bridge, right? Okay. Anything more on this topic, or are we good?
No, well said.
I'm going to bring in Duncan, and I want to see the Duncan Hive go absolutely crazy in the chat right now. Look at this kid. What does that hat even mean? You're getting increasingly more abstract.
Yeah, what
with the things on your head?
It's a film lighting company.
Is that the PLO? Are you
film lighting company?
No, yeah, they make really great fluorescent lights for film sets.
But what are the letters? What is the?
It's like a K, and it's supposed to kind of spell out Kino Flow.
Okay, awesome. Can I see your shirt? More importantly,
Oh yeah.
you have the first version of the
Yeah,
Compound and
Compound
Friends
and Friends.
T-shirt.
Yeah.
If you guys want to rock that shit, go to idon'tshop.com. Available in all sizes and looking pretty good, man. I gotta say.
Yeah, I think
Looking pretty good.
it came out nice. Looks good.
Came out really nice. I got to cop one of those. All right, what's our first viewer topic?
Can I just say I shopped the other day?
Did you?
For what?
I don't know. I only have like 5 pairs of basketball shorts. I'm always running out, and like that's all I wear in the summer. So I'm like, what am I doing? I need more shorts. So I went on Amazon. I put in Nike shorts on Amazon. They didn't have them on Prime, so I shopped for a second, and I ended up getting the Amazon brand because I know I could get them tomorrow. There,
But not real basketball shorts don't have pockets. You're just saying shorts.
What's that? How's that? Whatever. Mesh shorts. I wear mesh shorts.
A man needs pockets in his shorts.
I got pockets.
Gotta have pockets.
Okay, so what my point is, the NBA shorts, like the real ones,
Dude, I'm not wearing NBA shorts. I just
don't have pockets. Okay, I don't know why this is important. Okay,
well, because you
Duncan,
said
go.
I don't shop.com. I shopped yesterday. I thought it was relevant.
All right, congratulations.
Okay, so first up, we have Kevin who wrote in giving you props, Josh, saying, "Hi, Josh. I vividly remember that you were the first person to call this suburban housing boom last March when the lockdowns happened. I am one of the millions of millennials that moved out of the city, Boston, for suburban life in Texas, Houston. Now that many companies, including some even in Silicon Valley, are requiring workers to come back to the office, a topic you guys just covered on the Compound and Friends, do you think that we might see suburban real estate cool off and possibly even revert back to more urbanization?"
That's such a great question. And we didn't cherry pick that because he started it with a compliment. However, if you do start your viewer topics that you submit to us with a compliment, there's a very high likelihood they will make it onto the show, especially if they're complimenting me. You could submit those to askthecompoundshow@gmail.com, by the way. I don't think so. What do I know? This is my opinion. I think that the headlines about Wall Street asking its people to come back, Wall Street people are some of the highest paid people on the planet. Some would say some of the most overpaid people on the planet. And I feel as though there's this attitude on the street where it's like you have to be like really well dressed all the time. You have to be bright-eyed and bushy-tailed. You have to show your commitment to the firm by being the first one in, the last one to leave. They torture their interns every summer, almost like for sport, with how many hours they can make them do bullshit on Excel before their brains explode. That's a cultural thing within finance. I don't think you're going to see that across every other white-collar industry. I don't think they're going to do that to lawyers, accountants, software developers. So I think the suburbanization of professionals who in a different generation would have stayed in the city forever, I think that's going to stick. And I think most companies outside of Wall Street are going to allow for that in the way they ask people to come back. By the way, even Goldman is doing 3 and 2. So there's very few firms that are like come back 5 days a week forever, full house, everyone has to be there. I think that's going to be rare. Mike, what do you think?
I agree.
Wow.
I got distracted.
No, that's fair. All right. What do
I
we
mean,
got
you were
next?
talking. It sounded like you were rolling. Who was that to jump in?
I'll go for the next 40 minutes on this topic.
I think what's interesting is what you guys were talking about the other day. You know, people literally quitting their jobs rather than have to come back. So that's another crazy thing.
So I think that's less white collar. I think that's much more people who are working hourly in conditions that weren't great, who are just saying.
The Washington Post did a piece yesterday. 649,000 retail workers just quit their job, like by far the most ever. People are like, I don't need this shit. What am I doing?
That's right. $12 an hour. I could find a better way to make $12 an hour.
They can.
So I think that's going to be a lot more prevalent. If an investment banker quits their job, who the hell is going to pay them anywhere close to what they were making? No, they're not worth anything in the wild. They're only worth what they've been paid in that context. So I think you'll see that at the lower end of the income distribution more so than you will at the upper end.
Okay, so next up we have a question from Chad, who has an interesting question, but a question that I see from time to time about possibly saving too much for retirement. Chad writes, by all accounts and research, it seems like my wife and I are saving too much for retirement. Using online tools and calculators.
No such thing.
Using online tools and calculators, it seems like by the time we hit 55, we will have several $1 million. It's hard to imagine that amount of money, even if 20 years of inflation has eroded some of its value. We live well below our means, and it seems like a waste to save this much money. I don't feel like we would live that differently if we had access to it now, but it just feels silly to save as much as we are. Any advice on how to approach potentially oversaving for retirement?
Give some away. I mean, that sounds like an obvious solution. If you're not looking to change your lifestyle, then and if you're not interested in hoarding it, if it feels like it's too much, first of all, it's a great problem to have, but it's an interesting one. I would say that find charities you're passionate about, whether that's giving to hungry kids or educational purposes, whatever it is, and set up the monthly automated deposit, and start there.
What about figure out ways to up your lifestyle, or maybe make some promises to other people in your family or friend group about what you can do for education for their kids.
That's a good
or
idea.
Their grandkids.
So rather than
give it away just randomly, why not be very intensely focused on how you want to give it away?
Yeah.
And do something really special for people's families that you know.
Yeah, that's a great idea. Contributing to family, a nephew's 529, for example. Or
get one of those new Ford F-150 Lightning electric pickup trucks, because those are just going to be just get 2 of them maybe. I don't know. I feel like it's not. So for me, it's not hard to find things to spend money on. So this is a tough one for me to relate to. Duncan, you said you hear this a lot.
Yeah, well, so I think the way I would put it, the way that I see people write in about it sometimes is when are you going overboard and sacrificing your enjoyment of life today for retirement for the future, many decades away in a lot of cases. That's, I think people have trouble figuring out the balance there.
Yeah, you got to strike the right balance. We have what, Josh?
Can I give this person some advice? Don't be tweeting about this shit. Nobody wants to hear it right now.
Agreed.
Don't share this. Don't share this publicly under your name that you have this problem. I would advise against it. Just being honest. So. Not to go on a loan. He disappeared? All right. That was Duncan, ladies and gentlemen. Duncan Hive, we apologize for his sudden disappearance. All right. I think that's all we wanted to do today. I have a couple of notes that I want to just get in here at the end of the show. Let me go back to this. askthecompoundshow@gmail.com. Submit your topics. You guys are sending us awesome stuff, and we can't use all of it each week, but sometimes we'll use it a week or two later. And we just get so much out of seeing what you guys want to hear us talk about in general. So keep that coming.
Are we doing a podcast this week?
Yeah, well, we have Animal Spirits is tomorrow, first thing in the morning. So if you're a podcast person, Animal Spirits, I think, is the best there is. You don't want to miss that tomorrow. And the related video will be up here on this channel later tomorrow. Check out the Gold Mine. Check out the Compound and Friends later this week on Friday morning. idon'tshop.com for the merch. Hit the like button for the algo. Make sure you're having fun this weekend. Get out there. Go to a ballpark. Go to a baseball game. Go see a concert. Go do something cool. And we will be back next Tuesday. Wave goodbye, Mike.
Ciao.